My name is Shay Parks. I'm a principal with Milliman. I work in the Indianapolis office of Milliman. I do a lot of predictive analytics and product development, and I really enjoy what I do. I do have an actuarial background and get to sort of bring that flavor into the predictive modeling and data science realm. And today we're going to talk a little bit about mixing predictive modeling and actuarial science, but probably a lot more about applications, or not applications, integrations of predictive modeling or predictive analytics into different teams at a couple representatives here that are going to share their experiences doing data predictive analytics inside the organizations. So with that, I think we get to cut over and show our lovely faces now. Is that right? Oh, yep, we're on. Okay, so you have to go easy on us at least. This is the first one. This is the first live webinar I've done showing my face. With that, let me make sure if I stop talking, I think my face gets smaller and we get to see David and Sarah's faces bigger. So with that, let's jump right into having them introduce themselves. David, could you introduce yourself and tell us a little bit about how your company uses predictive analytics and what your role is in that?
Sure. Thank you, Shay. My name is David Moore. I'm a Senior Technical Director at Nationwide Financial in Columbus, Ohio. I lead a team that's called Life Insurance Predictive Modeling and Analytics. So clearly that's what our responsibility is. We've had really a focus on the new business process and how do we make that better. And a lot of that recently has been focusing on underwriting and accelerated underwriting. I know that's a hot topic in the industry. But in terms of how you use it and how you generate value, and that's a lot of what we'll be talking about during this webinar today. But with predictive analytics, really you're using data from decisions you've already done or data points you have, and are trying to use that to be able to gain insight about the past in order to predict what's going on in the future. So in addition to underwriting, which has been an example where we can gain value from pretty easily, there's a lot of other areas within the actuarial realm, like assumption setting, like policyholder behavior, where predictive analytics really is a good tool to use. And I think we're starting to see more of that come forward, both at Nationwide and throughout the industry as well. Now, Sarah, I'll pass it on to you to give your intro.
All right, thanks, David. Thanks, Shay. Hi, everyone. My name is Sarah Hinchy. I'm a manager within Deloitte's Life Operations practice. We use predictive analytics and help and alternative sources of data to help our clients drive business value from their data sets, and to help them to use advanced analytics to really drive value across their business throughout different elements of the value chain. Deloitte's, a little bit about Deloitte, our analytics practice has been around for 15, 20 years. So it's really grown a lot, not just focused on the insurance industry, but also other industries like retail, banking, consumer products, you name it. Specifically in the life insurance industry, some of our analytics solutions include application triage. You may be familiar with that term, or also known as accelerated underwriting in the industry. We've built predictive models to help life insurers with their cross-selling and upselling efforts and marketing, risk-based target marketing, also proactive retention models, as well as advisor recruitment and retention models. In terms of my role, I've served in a variety of roles as an advisor, subject matter expert, as well as project manager on several of these different types of projects. Prior to working at Deloitte, I spent 10 years working actually in the insurance industry at insurance companies, held a variety of roles, started off my career in pricing and product development for life insurance and annuity products. And then I moved into marketing, worked directly in a marketing team, worked in business strategy, business development. And as part of my role in the marketing team, I helped my employer, a large life insurance company, to develop a data analytics, customer intelligence center of excellence from the ground up. So I've gotten to kind of see how these predictive analytics teams can be developed right from the start. And maybe, one of the questions, I think, Shay, did you ask about what predictive analytics means?
Oh, no.
Or not yet? Okay.
Well, okay, let me just go ahead and ask it, but I wanted to tee it up just because we're on webcams, so I can actually air quote it. So hang on here. So what does predictive analytics mean to you? And let's start with you, Sarah. What does predictive analytics mean to you?
So to me, predictive analytics, to copy your air quotes there, when I think of predictive analytics, I think of it, not just the technical side, but really this whole cycle of, starting with first identifying what is the business problem that you're trying to solve with predictive analytics, and clearly defining the problem to be solved. Then, identifying, gathering, consolidating data across different systems within a company, analyzing that data, using that data to build models or algorithms which can use historical data so that are built off historical data to develop predictions about future outcomes, and then to actually implement those models in the business and monitor the effectiveness of those models afterwards to complete the cycle. So when I think of predictive analytics, I think of it, not just the modeling aspect of that, but really the full cycle of, I guess you could call it business process change, and incorporating predictive analytics as a tool to affect that change.
No. Thank you very much, Sarah. How about David? Do you want to join the air quote fun and talk about what predictive analytics means to you?
Sure, it'll definitely, Shay. Are you're doing that extra slow so everyone can get a screen grab of it?
Yeah, that'd be great.
But I think to build on what Sarah said, it's important that it's a tool, but the focus has to be on what is the problem you're trying to solve, and then the predictive analytics is a way of putting together vast amounts of data and technology and computer processing that is becoming more available and more prevalent to us today. So, but when it comes down to it, it's about solving a business problem. So if you're using analytics to do dashboarding, or using something like Tableau to get insights on the way you're presenting it, to get better business information to management or to leadership or decision makers, that's using analytics. If you get into using predictive models, there's many different types. You can use GLMs, you can use more advanced machine learning, and there's a lot of capability there. But again, what you use should go back to what is the problem you're trying to solve. You want to use the tool that's right for the job. You don't just want to use a tool because, look, it's cool. There's people that are using predictive modeling or predictive analytics. But again, we have the ability to gain better insight on the way we do business, and across the board, from certainly applications like underwriting, but marketing and assumption setting and fraud detection. There's so many things that we can use to make the business more efficient by either finding the right people to market to, or the right people to probe, for potential fraud, and really operate the business much more efficiently as a result of these analytics tools that we now have.
Excellent. Thank you very much. I will now put my hands back down now, may wave them around, but not air quote as much. I know you guys have both already sort of used the words we or team a couple times, and I think it's pretty important if you're going to develop predictive analytics capabilities to not be a one-person silo. It sounds like you guys are both very successful at that. Could you talk a little bit about, let's focus on what did you guys learn or what sort of lessons would you want to share about building up sort of a team to do predictive analytics at your company? And David, would you like to respond first?
Sure. Building a team is certainly a challenge, especially in a new and emerging area. So at Nationwide, I'd say there's a couple things that have been really beneficial to getting our team going in life insurance, and that is, as a large multi-line company, we already had data science teams up and running, operational, both at an enterprise level as well as embedded within our P&C business. So in terms of building out the capabilities we have here on the life side, and we're still in our infancy relative to where we are in other areas of the company. Our enterprise analytics team, which originated as really a marketing analytics team, but has grown and grown and works on claims and fraud and underwriting models and catastrophe models in order to have an idea, what kind of reserves we need to hold at the time as soon as the data is available on a hurricane or a fire. But we've been able to partner with them and have data scientists from that team supplement our team on the life side, which has enabled us to ramp up much quicker. Another thing that I'll say is and I'll use this word for the one and only time in this webinar, is people looking for unicorns, and a unicorn being, the actuary who understands data science and can build models and understands the products. We're not looking for unicorns. You can't find unicorns. They don't exist. Oh, sorry.
Oh, no, I'm counting the number of times unicorns.
Okay, well,
I'm sorry.
You got me there, Shay. So I did use it multiple times. But anyways, if you have the right team and the right structure, so we have some people on our team, I would refer them as data engineers, and they can handle scrubbing the data, cleaning the data, getting it in that format that we need to allow the data scientist building the model to be as efficient as possible. With some of the actuaries that get involved in this, we're defining the problem and the inputs and outputs of the process. That way, we don't expect the data scientists to understand all the intricacies of the business process, i.e. the underwriting function. They can focus on optimizing the model and getting the best predictive value out of that model. So we're able to use different skill sets and put them together to form a team that works really well together. As an actuary, a lot of us have a background in statistics and can easily get involved in the model building, but also have an understanding of the bigger picture, how the products work, maybe the needs from a sales side, even in the regulation side, which could have an impact on the way you use that model or the application of it. So I've been able to be involved in kind of the end-to-end process, and even though maybe I'm not getting my hands as dirty as some people in terms of building the models, I can work very closely with the data scientist who is building the model, again, to make sure we get the most value of it at the end. So in terms of building a team, find the right people to do the right jobs, and certainly the actuarial function can fit in a few areas of that.
No, thank you very much, David. And I will say personally that in a lot of our team building, most people on the phone have some idea what people mean, or what people on the phone are meaning when they say actuary and or unicorn and or data scientists. I do think that we personally have started identifying and emphasizing more data engineering at our at our area. So, and it's sort of weird, like the data science, sort of the hype, big bubble got bigger, but say we still have people that identify as data scientists, but you have, you said, that mix of actuaries that help define problems, but then you also need data engineers to help sort of stitch together the data pipelines, and depending what you're doing, all sorts of other specialized roles too. So looks like Sarah said that she's in general agreement with everything we said on the building a team on that one. So thanks, Sarah.
Shay, I'll just add that I think the roles can also be loosely defined. I'm seeing a lot of actuarial students who are doing minors in data analytics. And I think as people understand the importance of the skill set, you see a lot of people who may not cleanly fit into one bucket or another. So it's maybe something you can't predefine, but understand the roles available to you to build your team.
No, I agree with that too. Although there is some conflict we have on, as you said, a little bit of ambiguity there, but you do then want to make sure that there is a career path, or sort of people do get to see what they want to be in, 5 years or so down the road, just to make sure that people aren't sort of lost in the shuffle and getting a little concerned in the long run about what they're doing. But you are right that there's a lot of flexibility in who's doing what there. So, all right, well, let's move past a little bit.
Can I interject real quick? I just had one other thing to add before we move on. In terms of building out the team, and this just popped into my head, but for the audience, if you are, someone that's looking to build together, if you've been tasked with building together, a data science team, and you're trying to figure out what, skills and types of profiles of people you need, there's a really cool infographic. You can just Google modern data scientist infographic, and maybe Shay, maybe David, you've seen this before. There's two versions. There's a male version and a female version, so can be gender neutral. But it's just like a cool infographic because it shows that modern data scientists, it's a blend of different skills. The skills you want on your team are things, like strong business knowledge and understanding of the business, strong communication skills, computer programming skills, as well as a statistical mathematical background. And I think the key to that infographic when I look at it is not that one single person is going to have all these skills, but that in the team that is working on data analytics or predictive analytics, you want people that all together combined bring to the table that set of skills. And I love that infographic. So I just wanted to throw that out there.
No, thank you very much. There are a lot of really good infographics, and I absolutely concur on the, I'm going to use the word again. I'm sorry, David, even though I made fun of you. You don't need unicorns as long as and actually you probably shouldn't do that. You should be aiming for a good balance of the team skill sets, as you said, Sarah.
Exactly. Yeah.
Okay. Well, let's move past the team discussion a little bit here, and we're going to go to something that's a little buzzwordy, but I'm not going to air quote it. And let's talk about creating data-driven cultures. So, Sarah, what does that sort of mean to you to have a data-driven culture? Do you think it's important? And if you do, how do you grow that? How do you emphasize that at your company?
Sure. So let me talk a little bit about my experience when I was actually in the industry, and how it was one of our strategic objectives to build a more data-driven culture within the organization. When I look back on that experience, I really think that a key to, building that culture was right off the bat, having really strong executive level sponsorship. I think that was just key to making this whole, data analytics initiative work. Was we had strong executive sponsorship. It was driven. The whole initiative started from a need in marketing to, have a better, more customer-centric experience, to be able to deliver the right products and services to the right customers at the right time. And this was just a huge, strategic objective for the company as a whole. And so the idea to develop a customer intelligence center of excellence, or data analytics center of excellence, whatever you want to call it, really, stemmed from this, senior level, was sponsored by the company's chief innovation officer, who reported directly to the CEO of the organization. And, just having that visibility for data analytics, customer intelligence, having that level of visibility, I think was really important in terms of kind of driving, just making it visible that, the organization was trying to be more data driven, had these this customer intelligence program in place. It also, like, the senior level sponsorship, they gave us the permission to test and learn, which I think was really important. There was, a push to pilot different projects across the company, different applications of predictive analytics. So, we had to first identify the opportunity set. What are all the applications of analytics that come to mind, how we could improve our business, and, in marketing and underwriting and claims. So kind of identifying the opportunities, then prioritizing those opportunities. And, to identify and prioritize the opportunities, it was very important to have stakeholders from all parts of the company involved: marketing, underwriting, operations, to get that sort of, sense of, I think, camaraderie and teamwork, right from the start, right from the top. And, having stakeholders work together to prioritize where they wanted to focus, where they wanted to pilot applications of analytics, and identify together, what applications are going to, what are the quick wins, where are we going to see value right away, what are some things that might be more long-term strategic because, hey, we think there's a lot of value in it, but it's going to be really hard to roll out and require a lot of change in our processes. So I guess to summarize, I think, having strong stakeholder buy-in at the executive level is really important. Include kind of a culture of inclusiveness. Like, predictive analytics is not like a function on its own. It requires collaboration across the business, across functions, across departments. And I think, building sort of a cohesive culture of collaboration is really important in order to, be able to build this data-driven culture and have people on the same page. And with that, I'll stop before I keep going on and on and on. But
thank you very much.
I think that would be, for me, I think the key is having strong executive level support instead of, just starting kind of, I don't know, like a team in the corner that isn't as connected to the business. I think having a strong executive sponsorship also helps to make sure that any predictive analytics projects and initiatives are really closely aligned with the overall strategic objectives of the company. And I think that's really important.
No, excellent. Thank you very much for sharing, Sarah. David, would you maybe want to talk a little bit about what you and the other actuaries have done at your company to cultivate the data-driven culture? I mean, definitely what you've talked about, I believe you guys also have a very data-driven culture, and I was curious if you bring sort of an actuarial perspective to it. What do you think, David?
Sure, definitely, Shay. I mean, in terms of what Sarah said, things that resonate with me, you need top-down support from the chief innovation officer all the way down. And the ability to some people say test and learn, others will say fail fast. But really that's saying you've got to have the ability to experiment. From an actuarial side, in addition to, the work we're doing, that my team does in underwriting, throughout our actuarial organization, we call it actuarial modernization. I think there's a lot of other companies that are going through this process as well, which is around looking at the jobs people do on a day-to-day basis and saying, can we use data or structure the way we do this to make us more efficient? And so I don't think this is necessarily just a predictive analytics thing when we're talking about a data-driven culture, but putting the right construct in place with your systems and your processes to allow actuaries to have a lot of their day-to-day data work automated so that you can focus on using your mind to do that analysis and use that for strategic risk-based decisions, which is really what we do as actuaries. I'll also say that, I mean, as terms of as focusing on culture, and throughout a large organization like us, it's hard to change culture. We have a lot of people that have been doing functions for many years, and the pace of change has really picked up. And so to be able to emphasize that and say that, there's certain things about the way we do business, the way we use data that we need to change in order to prepare ourselves for the future as a company. It's sometimes difficult to get that message through. Sarah, I think you just quickly hit on quick wins, but I mean, that's something to me, you can have a test and learn environment, but you have to have some quick wins to help sell that concept to people to say, yes, we can use analytics to automate decisions here, or we can use predictive analytics to make better, more consistent, less biased decisions here. But you're always going to be changed, I think, or challenged with that change. From the underwriting standpoint, I think one important aspect is helping people, understand how that transformation is going to happen and drive the transformation. I think people worry about, machines taking their jobs as whenever you talk about automation. But we need to, in our business roles, be able to define what that problem is and how we're using the technology and the analytics tools to solve those. So, whether you're an actuary or an underwriter, the work you do in the future may be determining how to solve the problems and how to use the tools, rather than actually, going into Excel and actually calculating the number or putting in a macro, yourself. It's more of the higher level business process that you need to use. And that's something that's still going to challenge us for the next few years until we are fully transitioned to being a totally data-driven culture.
Excellent. Thank you very much for that, David. So in the intro, you both talked a little bit about accelerated underwriting, which I think is a great fit for predictive analytics in life insurance. How do you both may have a little experiences to share about integrating predictive analytics and/or yourselves into marketing at your company or other companies or some other divisions out there inside your company? David, do you want to respond to that one? Or
sure. I mean, I think especially here, marketing is one of the original areas where predictive analytics were used, and it's something where maybe there's a lower bar than underwriting, where you don't have to be as accurate, where we're able to gain value by building target marketing models. And typically if you're using some kind of an outbound marketing, I think 1% was a successful marketing campaign. And if all of a sudden that you can use a model and get that to get a 2% response, you've doubled your response without requiring a whole lot of lift. And so there's a lot of the data providers sort of originated with this need to fulfill, whether it's an insurance company or any company that's sending out catalogs or doing some kind of outbound marketing, that there's a lot of predictive modeling going on in many industries. So it's
look at your Facebook feed.
Yeah, exactly.
All the ads that you see, those are all based on predictive models.
all coming from targeted models. So going forward, I think the marketing function changes though as we have, again, more data, more power to see in not just marketing to someone, but engaging the customer. So that's an area where I think some companies are experimenting and in getting that engagement with the customer. And I think as an actuary looking at risk management, it almost comes full circle that if you can now nudge the customer's behavior, you can potentially make them a better risk after they've already bought a policy already. So that's an aspect going forward where I think we can tie in what we've done with marketing analytics to what we do with other underwriting and risk analytics, and maybe change the scope of what we do going forward.
Excellent. Thank you, David. I think you did a great job of sort of talking about the value, bringing from marketing, like that predictive analytics value bringing in. Sarah, would you happen to have any thoughts or examples of bringing some actuarial perspective into the marketing side?
Yeah, definitely. And I just have some great firsthand experience. When I was working for a large multinational insurance company based in the Netherlands, I made a sort of a shift from the pricing role that I was in to actually shift into marketing. And so I embedded myself, stealth mode. No, just kidding. But really, embedded myself as the only actuary working within a marketing team. And so all of my colleagues were marketing or sales, had a marketing or sales background. And I think just right away, being the actuary in that team, I was able to add a lot of value right away. I think just first off, probably the biggest value was the cross-functional learning that occurred between the knowledge and experience that I had and my marketing and sales colleagues and peers. For example, like I was able to educate my colleagues in marketing and sales on like a lot of things that I took for granted, such as like how these products actually work. What are the profit drivers of the products? What are, how do pricing models work? What is a cash flow projection model? And how does that, like, what are we talking about as actuaries when we talk about cash flow projection models? A lot of things that I took for granted, I realized that, I could educate my peers and show them and open up an Excel spreadsheet and kind of show them, hey, this is what we're looking. And, these are the different profit drivers for these products. For every dollar of premium that comes in, this is where it goes, percent to commission, expenses, claims, all these different ways for them in marketing to start thinking about our products differently. And so as an actuary, I kind of came from, I'd say, having more of a product lens, and the marketing and sales had more of a, their perspective, they saw through more customer lens. And so they were actually able to share with me their perspectives, really thinking through the customer journey and customer value propositions, customer moments of truth along the customer journey. What's the difference between cross-selling, upselling, deep selling, even this basic vocabulary that is unfamiliar to me. I didn't know it. And, I felt, kind of silly asking some of these questions, but, they were really good and patient and explained all these marketing concepts to me. So there was just a tremendous amount of cross-learning. And I think that, created a much deeper level of respect for each other's roles and functions in the company, a greater understanding and respect for each other as colleagues. So I talked about the cross-functional learning. I think, being an actuary and coming from that different perspective, having a different view on things, really was valuable. I was able to add value to the team right off the bat. I'll give you two examples. First of all, I was able to improve the analysis of, I was able to improve the interpretation of the data analysis that they were performing. So one of the things that the team did was, as part of this customer intelligence initiative, was to gather data from all different pockets of the company, extract it, bring it together, try to create this 360 customer view to try to aggregate customer data basically for each individual customer and see the customer in all the different contexts and data fields that they had spread across the company. And within this report, which basically sliced and diced all the data, I was able to page through the report and kind of say, hey, it makes sense to look at it this way, or hey, actually, these products need to be categorized differently. Like, these products are investment products. These products are pure insurance products. These are a mixture of investment and protection insurance products. So I was able to help out with recategorizing products for the reports, was able to, help identify, the reasoning behind certain trends in the data or outliers in the data, was able to kind of help my colleagues think about things differently. As part of this insights report, they were trying to find correlations between lapses and different variables across the company related to the customer. And they had data on account value, and this was for an variable annuity product. They had data on the account value and data on the benefit base. and they're looking at, lapses by account value over time or by benefit base over time. And, immediately I looked at that and was like, hey, like if you take the ratio of account value to benefit base, you should be looking at moneyness. Are these contracts in the money, out of the money? And there right away, the correlation was a lot stronger between lapse behavior and moneyness. So that's just kind of one example, a detailed example, but it was kind of these analysis and reports. I was able to take a look at it right away and be like, hey, you should look at it this way, or why don't we look at it this way instead? And secondly, another kind of area of value was I was able to help develop metrics for customer lifetime value. That was one of the calculations that the marketing team was trying to develop in order to segment the customer base into different groups. The purpose of the segmentation being to develop a different communication strategy for each customer segment. And, I kind of looked at what was initially being used to measure customer lifetime value. And right away, I was able to look at that metric and say, hey, I think we really need to bring in some actuarial present value calculation into this. I think it would be really, beneficial if we talked to the actuarial side of the company and got them to, produce a new data feed for us, which we could include this present value future profits calculation into the customer lifetime calculation. And, me being the actuary, knowing my actuarial colleagues, I was able to, first of all, come up with that idea to improve the metric. And secondly, be able to communicate with the actuaries in the company to actually create that data feed and create that connection. So I think, being on it, working within marketing was a very valuable experience to me. And also, I think just really added a lot of value to the company overall in improving their analysis and metrics.
Oh, excellent. Thank you very much for sharing those detailed examples, Sarah. All right, so we're coming up on the end of sort of the time that we skip stuff here. Let's move to sort of a final, hard question. Let's start predicting what's the next step for predictive analytics in life insurance. So David, let's put on your real forecaster's hat and tell us what do you think's next out there for people.
What's next? I mean, there's still a lot of uncertainty, I think, and especially around, I think, actuaries who are wanting to learn more and wanting to get involved more. There's a lot of excitement when we talk about what potentially we're doing, but we still have a very small team working on it here, and probably expect that's the case at most companies. I think that as actuaries, whether we're in insurance or consulting or it's something where the way we think about it should always be as customer focused and what are the problems we're trying to solve, and think about the tools. And this is a new tool set that's available to us in terms of learning and building your own skill set. There are many ways to get involved. And obviously, it's great to see that the SOA has a predictive analytics exam that's going to start up this fall. It's a topic that's being now part of the curriculum in many of the universities with actuarial programs. But there's also a lot of free information, Coursera that you can get. Someone can get involved and teach themselves the fundamental tools of how to use analytics, how to build models, how to have a data strategy. It's certainly something where Sarah, all the examples you gave of adding value were great, because I think that, again, the actuarial skill set goes beyond the statistical modeling to look at the big picture of how do I manage risk in a large business, and therefore how do I understand not just a statistical model but the context of that in running a business and providing value. Whether that is making more informed decisions, whether that is reducing expenses, and all the other applications we talked about. So I would say that as an industry or as a profession, it's something that becomes even more important to us as we start to look at some of the disruption that's going on in the industry. Are there people that are using models from outside of the insurance area? Are there startups that are going to try to sell insurance products to what potentially could have been our customers, or can we use analytics to better go after the middle market, the nut that the industry has been trying to crack for years? That how do we get, from my context specifically life insurance, how do we get higher percentage of people insured and make them understand the importance of life insurance? So it's something that is just going to become more prevalent, more important, and I think the more actuaries that are learning this, at the start of their careers and getting involved in it, the better. It's something, when you're dealing with something that's new and innovative, it shouldn't be done in a silo. We should have lots of people working on this and experimenting and figuring out what the best way is to use models and to improve the business.
Excellent, thank you. Sarah, do you want to wear the forecaster hat of what's next for predictive analytics in life insurance?
Sure. When I think about what's next, I think there's some really exciting things happening in the life insurance industry, and I never thought I would say those words. So, it's just, yeah, right? Insurance is becoming really exciting, and there's a lot of buzz, especially around the life insurance industry, with, this kind of shift from seeing life insurance as a product to, pay out claims if you die, basically. So shifting the focus from paying out claims to now shifting the focus to preventing those claims from happening in the first place. And there's more of a shift in wellness and helping customers to live healthy lives through, the use of wearable devices, fitness trackers, healthy eating, healthy grocery shopping, getting rewards for this kind of healthy behavior. And to me, that's really exciting because it now takes the focus on helping customers live a healthy life. And the interests of the insurance company and the customer are very closely aligned. What that means for data analytics and predictive analytics, that just means there's a wealth of new customer data, customer touch points. Obviously, there's sharing of data and privacy issues, which are extremely important and will need to be addressed, and companies need to figure out if they collect data, if they have permissions to use that data to nudge customer behavior, to nudge these users of the Fitbit, the wearable device, to send them little pop-up messages to help nudge their behavior. So there's definitely questions around the usage of that data, but for right now, I'm really excited that that data exists, and that there's an opportunity to really help influence customers' lives. So I see new data sources such as wearable data coming from wearables, electronic health record data to expedite the underwriting process. I see these as kind of two new hot topics in the industry that are really exciting, and I think that they're going to help transform the life insurance industry to be more customer centric. And then again,
one thing I'll add is that there's a trust issue in life insurance, that there's mutual distrust when someone is applying for a policy, that we think the applicant's trying to get one by us, and they don't trust this big bad insurance company. And I think that again, whether it's wearables, whether it's health or wellness programs, continuous engagement, and then there was something talked about at the recent Predictive Analytics Symposium around genomic mapping, where an insurance company can include that as part of the policy, and then if someone has cancer, they can understand what drugs work better on someone. That was really a future state example, but doing things that align the insured with the insurance company and create a sense of trust going forward will really benefit the industry.
Okay. Well, thank you guys very much. We're going to shift over, provide just a couple other snippets of information, and then we're going to start doing some audience Q&A. So you're going to lose our faces just for a moment here, but then we'll get them back and you can see these smiling guys for just a little bit longer. So Eric, can you send us back to the slides? All right. I'm going to make a prediction that everyone on the audience can now see the slides. So what we're talking about next is some other resources that you can learn more about predictive analytics. Society of Actuaries has their own Predictive Analytics webpage. It's the first link on here. Then there's also the Predictive Analytics Futurism section. Now it says newsletter on here. Honestly, the Predictive Analytics and Futurism section, I participated in that section. I think David and Sarah both did as well. That's really a rich area to participate in, learn about volunteer opportunities, or just learn about research and ideas in the area. But if you like newsletters, you can read them there, podcasts, and they help sponsor the recent SOA Predictive Analytics Symposium. And speaking of the symposium, it did just happen a couple weeks ago, but there's lots of other opportunities and events running concurrently with other SOA meetings, and you can see about all those in the SOA's Professional Development Opportunities calendar there in that last link. And then if you want to hear more about what actuaries can bring to your company, the SOA has an excellent resource. Courtney Nishan is a really great person. I've worked with her multiple times. Here's some contact information for her, phone, email, reach out anyway, and she would be happy to chat with you. So with that, let's bring back the faces so we can start doing some user questions. Again, I believe it was as part of the webinar, there should be a chat function. Send in questions there, and then if for some reason you're dialed in and not seeing our pretty faces, I believe there is an email address, the SOA at compartners, COMM partners.com. That's a way to submit your questions, and they'll get over to us. So let me go. Oh, Eric, go ahead, please take over and introduce the Q&A. I'm sorry, I stole some of your thunder.
Sure, yeah, you covered most of it, but just as a final reminder, to enter a question through the web conference system, simply type your question into that box in the lower right corner of the window and make sure you click on the send button to actually submit those questions. Shay is going to read our questions out loud and then respond so that everyone may hear them, and he did mention that SOA at compartners.com if you do not have access to the chat box. So Shay, please go ahead with any questions we have.
No, great. So one of the first audience questions is about, do you have any thoughts on illustrations and how they could benefit from predictive analytics? So David, would you like to maybe respond to that one?
Sure, and by illustrations, I assume that means life insurance illustrations, or if there's something covered by the illustration reg. I mean, I would see this as something where the underlying assumptions that there's potential for those to be looked at for potentially increased segmentation, have a better understanding of someone's perhaps mortality or lapse tendencies when you're putting that together. It's not something that we've looked at that at this point in time, but I think in a future state, there's potential for a lot more segmentation on any assumptions that we're using, and whether that's segmenting groups by mortality or policy holder behavior. That's something that could have an input into the illustrations.
No, thank you very much, David. I've got another user question asking about what kind of innovations we can see in terms of product design space. I'll give a quick response to that one. I do work in a lot of, I guess when they say product, you know what, I think of different things when they say product. I'm forgetting life insurance or life insurance products. So actually, let me not answer that one. Let me say about innovations in terms of product design space. Sarah, would you want to give some thoughts on that?
Sure. So assuming that we're talking life insurance here, the innovations that I'm seeing in terms of the product design space, this kind of goes back to my response before about integrating, new wellness apps, trackers into products to really encourage customers to, behave in a way that is good for their health, whether it's diet, exercise, meditation. I think there's one life insurance company that, recently partnered with a meditation app and is including that as part of their platform to really address not only like physical health, but also mental health and well-being. So I think in terms of product design right now, what comes to mind is just the new features of products and kind of the value add. So not necessarily changes to the underlying like product as we typically think about product as actuaries ourselves and like how the cash flows work, but changes in additional features and riders. And I think maybe once we as actuaries get our hands on some of that data and can start drawing correlations from how that data affects behavior and longevity, morbidity, et cetera, then we may be able to change, underlying mortality assumptions that are used in the models. But I'll stop there. That's kind of what pops up to mind right now in terms of changes I'm seeing in the product design. It's just more of a focus on prevention and wellness.
Excellent. Okay. So David's had a moment to gather his thoughts. So let's turn to David
yes.
about product design innovations with predictive analytics.
I'll agree with what Sarah said. And then, that's certainly everything that aligns customer with company is a good idea. Wellness is an example. I think that one of the challenges today with product is that people don't quite understand their needs. And if there's more flexibility or ongoing engagement where the dynamics of the product can shift over the course of time. Do you need $1 million of life insurance from now until you die? Or does that change depending on your point of time in life? So I think certainly having more flexibility in addition to having kind of the feedback loops or dynamic pricing. I think the data will allow us to do something that's more dynamic. One of the challenges with predictive modeling and life insurance is that we were selling very long-term contracts. So you're stuck in that risk for 20, 30 years, I think, or lifetime. On the P&C side, that they were able to get into predictive modeling a lot faster because they're only selling 6-month or 12-month policies, so it allows more turnover and using that data. So we'll see. I think there's a long way to go, but I think there's certainly ripe for innovation in the product space as we're looking at the risk assessment space as well.
All right.
And look, can I add one more thing that also just came to mind when David was speaking was also, I think the way customers interact with product and with companies is changing. Now with everyone wanting to do stuff digitally on their mobile phone, I think something that falls under the realm of product is just how customers connect with their product. And are they able to check their balances, check their coverage through their mobile app? Are they able to lever up, level down their coverage? Are they able to, pay premiums, make contributions if it's an investment account? without necessarily going into a brick and mortar office and talking to a traditional financial advisor. So I think the way customers want to interact with their products and their customers is also changing. So the whole, I think, customer experience around the product is also changing.
Yeah. Thank you very much, Sarah. Let's try to get a couple more here. I've got someone's asking, many companies have I got to pull out the quotes one last time here, business intelligence team that manages existing databases, KPI reporting. And they're worried that a data analytics team would either overlap or conflict. And they're saying, what would you do about those potential conflicts? And I'd say, in general, that business intelligence team is likely also investigating doing more predictive analytics, and that no matter who's doing predictive analytics, they're going to be, involved in the data, and so they need to be involved in the predictive analytics. So I think if you can, try not to go in thinking conflict, try to go in thinking collaboration. It would be my personal suggestion on that one. Let me see here. I know I left it here. Data into insights frequently. I guess I have the last one here. You want to add any? We had someone sort of basically asking about the long-term nature of these products in life insurance realm, and how can you handle how frequently predictive model updates can happen, and how does that mesh with these really long-term products in the life insurance space? For example, if you use a fitness score, can changes on that, is anyone thinking that changes in your Fitbit or changes in your own lifestyle actually affect lifelong premiums? So,
yeah, I think that's a very good question. Part of the answer is we don't have all the data yet. I think that's one of the mysteries of the wearables, is trying to figure out what metrics, is it steps, is it resting heart rate, what's actually going to get your mortality segmentation. I'll say that there's a couple third-party providers that are building mortality models that are mainly credit attribute based. We're using those. I know other insurance companies are using those, and they've had enough data to do mortality studies and show that something like that, which is not used in most companies' underwriting today, but actually is pretty sticky from a risk segmentation. So that if you have a very high credit score, you're probably going to stay with a very high credit score, and the mortality that goes with that will stay with you for a long time. Fortunately, we've had the data for people to look into that. We're still not at a place where we have scale for the wearable data yet, so it'll be interesting. But at the same time, I think we have to appreciate that the mortality risk and the factors around it can evolve significantly over time. The reason we have preferred classes and that we do blood with all our contracts goes back to the 80s, and when AIDS was an issue, and that companies put that into Protect, and that evolved the way we underwrite, and has kept up till today. I think there's certainly some issues we're looking at today as opioids become a bigger issue, and so things are going to evolve and change. And I think any model, you have to keep testing it, keep recalibrating it. It's not a static measure of risk. So it becomes definitely a challenge for us to face.
Okay. Well, thank you for those thoughts, and thank you, David and Sarah, for all your time today and braving the scary webcams. I think you guys brought some great insight, and with that, I'm going to turn it over to Eric to take us home. Please, Eric.
Thank you very much. With that, we will conclude today's webcast. If you do take a look at the Resources tab on the right-hand side of your screen, you will see the webcast evaluation. Please take a moment now to complete the evaluation and give us your feedback on this program. Click on Submit when you have completed the evaluation to send us your responses. Your comments and suggestions are very important to us, and they help us to provide you with this kind of quality programming. To register for any of our upcoming webcasts or meetings or to purchase recordings of previous webcasts, please visit www.soa.org today. Thank you for your participation in today's webcast. We hope to see you here again soon. Today's program is copyright 2018 by the Society of Actuaries with all rights reserved. This concludes today's program. Thank you. You may now disconnect.